Cool. So today with me is James Camp. James, you're a serial entrepreneur. You've built a few businesses, sold some of them. Your big thing right now is you buy and sell websites, which is something that I really want to get into. So you basically flip websites, you buy them for a few thousands, maybe even just a few hundreds of dollars, and then you sell them for 10x the value in maybe a few months later. So I think that's really cool. That's really interesting. And yeah, I think we're going to go into a bunch of interesting topics. Welcome. Thanks for joining.
Thank you for having me, Matisse. I'm excited, dude. It's cool to keep it conversational. I think you touched on something that a lot of people don't recognize, which is that I sold a few of them, but so many of them I have not sold, right? Is it like I am, serial entrepreneur is like so key here, because if I had like $1 for everything I tried, I'd have like an extra $1,500 right now. Just most things I've tried have completely failed. So now I think, like, why not just sort of buy these small cash flow positive micro businesses and improve them and flip them? It's much more replicatable. So yeah.
So I really want to dive more into that, and I want to dive into some of your big successes, but I also want to start with the failures, because exactly as you said, I think it's so important to talk about that, because people don't see that, right? And I love it. Do you know who's Peter Levels?
No.
He's kind of big on Twitter as well. He's like one of those indie founders, indie hackers. He's a solo founder.
I do know. Yes, I do know who he is. Yeah.
He's making like 3 million in revenue, 70-80% profit margins, which is absolutely wild. And everyone sees that. It's like, oh my god, that's crazy. That's such a great business. And he posted the list of all the businesses that he tried over the last 7-8 years, and it's over 100 different things. So he launched 100 different things.
I gotta do that.
Which is, it's nuts. And then you see that.
No, I love this, man.
It's great. And it's like out of those 100, I think there are now 4 who are actually generating revenue for him. So it's like, 96 of them, he spends time on it, he spent money on it, it fails, there was nothing out of it. And that's just the reality, right? That's just the reality of business.
Sure, yeah. I think the other part of it, though, is that, interestingly, what I've found is, like, I'm a really firm believer in momentum. And so, like, what I've found is that I had a sort of big win a couple years ago, and, like, I've been able to keep stacking up some wins since. And I think it's sort of about, like, once you get some momentum, is like, once you've won once, it makes it much easier to win again, right? Partially because you sort of recognize what's not worth your time and what is, and also just because you have that mindset, which is that, like, I can actually accomplish these things.
Exactly.
And then the third piece is that, like, forget money you have in your pocket. You sort of like a gold star or a feather in your cap that other people look at and they believe in you, right? Yeah. So, like, if you come off an exit or a win, and I say, like, I know, for example, I won't say who, I had a founder of a very famous unicorn, venture-backed unicorn that's out now, DM me yesterday and offer me $2 million, right? It was like, hey, what are you working on? What can we do together? I know you flip websites.
Yes.
And I was like, it's not really, I don't buy for people and manage, the money is not really worth it for me. Because, like, what if I gave you $2 million? What could we do, right? And so my point is, like, if you get a win, it makes it a lot easier to win moving forward.
100%. 100%. Yeah, exactly. Other people see you, other people trust it, but yeah, you get that momentum. It's like, man, I see some friends who build a successful business, like, quote unquote successful business, when they were 16. Like, they sold 1,000 t-shirts, and, like, that's a big deal, right?
Yeah.
When you're 16. But, like, man, then they didn't succeed at anything for the next 5 years, but they kept going because they had that one win, and that was, that kept them going.
Let me transition really quickly. So I sold a little company, very small company, when I was like 19.
Yeah.
I sold a CPA network, an ad network, an affiliate network, right? And I had been a decently sized affiliate marketer, a publisher it's called, and I started brokering leads between advertisers or publishers because I was getting paid more. And so I had that win early on. That was like a sub 6-figure win, right? But it felt like a major win at 19.
At 19, yeah.
Right? And to that point, I did not hit another real win. I mean, I had some, like, okay things happen, and I went into some other industries, and I was getting lots of consulting work and stuff. But, like, in terms of entrepreneurial endeavors, I didn't get another really big win until I was 33 now, about to be 34, 2022, till I was 31 or 32, and I just kept going, and I would make money here and there, and I would get some big clients to pay me and stuff like that. But in general, like, my entrepreneurial, I must have tried 50 businesses between that when I was 19 and between the one I started when I was 26 that I ended up selling when I was 30, 31, right? And 31? Anyway, it doesn't matter. My point is, it's exactly like you said. I had just a little piece of me that was like, I know this is possible. I know this is possible. I know this is possible. So I just kept falling flat on my face again and again and again. And then was like, would get back up because I knew it was possible to win again. And now the last one, that win I had was sort of big enough that like, I'm not super worried about wins in the future again. But yeah, I mean, the failures were never ending. You know, like in fact, to the point where I'm embarrassed, I'm trying to own the fact that I'm a serial entrepreneur and be cool about that. Because I think that term has become so bastardized, right? Everyone's an entrepreneur, right? Everyone, you know, it's like everyone's not an entrepreneur. Everyone just wants not to have a boss, you know? And so like there's, I think, a pretty big difference between wanting to be self-employed and wanting to be an entrepreneur. I love building things. Like I want to build businesses that become bigger than me. Right now, as you and I spoke about before we hopped on, I don't want to run $1 billion business. Doesn't mean I don't want to build one that becomes $1 billion business, right? But like my mission, what drives me is not autonomy. It is not working for myself. It's building things, right? Where I know a lot of people that think they want to be entrepreneurs. I think the reality is they want to be freelancers. And I'm not saying that's a bad thing at all. There's not a bad or good about that, right? It's just like, it's a different want. My want is like, my want includes me becoming a slave to a business sometimes. Right? And I think that a lot of people don't want that. They don't recognize that like being an entrepreneur might mean that you work 100 hours a week and you have, instead of one boss, maybe you've got 50 clients. So now you got 50 bosses that you have to answer to, right? So I filled in a ton of things, agencies that like kind of paid my bills that didn't really take off. Private concierges that we connected to credit cards where we were trying to sell spending data to institutions. Everything, man. I just can't even tell you how many weird things I tried that totally failed.
So one thing that's interesting with failures is, or one thing that I see with people who maybe didn't succeed yet, they fall in love with one idea, right? And then they keep going at it for many, many years, or at least let's say years, with zero success. There's nothing, right? There's no traction, there's no outcome, but you keep going. How do you know, where do you say, okay, this is a failure? Or when do you decide, okay, let's keep going?
It's interesting, and my answer is going to be so crappy, man, because the reality is that there's and you and I were talking about YC before, right? But Y Combinator, they talk about the trough of despair, right? So the idea is that everyone's really excited in the beginning about their business, and then all businesses go through this like lower down section that just sucks and nothing is working and there's no growth, and that most people quit in that valley of despair or whatever, right? So how the fuck do you know? And so I think part of it is like, you know, sometimes it's just a gut check, right? And then sometimes it's also more, I kind of believe that if you're working 10 hours a day on something and you're seeing no traction, you're probably working on the wrong thing. You know, like, and it doesn't mean, traction does not have to mean money, right? But some sort of growth, some sort of moving of the needle forward, right? So, I mean, candidly, I think that a lot of this is like, because when I was mentoring at Google, I mean, I remember telling businesses I thought their business was just going to fail, right? And that was the whole point of that accelerator, right? It was a very, very early stage accelerator. We were supposed to be sort of disproving business models early on. Versus like, I'm at Techstars now. Techstars is like, everyone's already funded. Everyone has money there, right? So it's like, my job is not to rip them apart and tell them to go home and rebuild their company from scratch. It's to help them move forward. But Google Launchpad is like a very early hyper accelerator. So I had people I was telling like, your business sucks, essentially. Right, but I'm sure some of them were right, and I was wrong, right? You know, like Howard Schultz pitched Starbucks to everyone in the world, no one took it, right? So I think that for me, the answer is that you just have to go get your hands dirty enough times to like know internally your gut check, and the gut check is not just the thing I talk about a lot. Is like I try to look at business in a vacuum. Like the vacuum of business is like hypothetically this would work best. Fuck the vacuum. That's not, because it's a hypothetical. That's not real. Let's talk about like what in Matisse's life or James's life actually works for them best, right? So if in your gut, you know, maybe somebody else could take your business to the moon, but you can't, right? But in your gut, you know you can't. It's just sort of a personal truth, I think, right? And so much of it is timing and luck, and anyone who tells you otherwise is delusional.
100 factors.
You know, so you just have to like be a real gut check of it, you know?
Yeah, and I think you kind of develop that over time as well, right? I think the more things you try. So something is the feedback that you get from, you know, mentors, partners, clients, whatever it is. And then I think the more things you try, the more you start realizing, okay, this is some kind of traction, or this is we're onto something here, or we're not on, you know. I think if you just stick, that's what I would actually recommend people, especially in the beginning, do try different things. I think it's better to just
Totally.
try a few different things rather than really fall in love with that one thing. Man, it's probably just the learning itself as you go through several different businesses or several different ideas. The learning itself is going to be worth it because I think you just develop, this gut for what's kind of working and what's not working at all.
100%. And, you know, the other side of that is that I think it's important to also recognize that for me, I kind of failed at some of these like bigger ideas. So when we're talking about trying, right? Like you're hypothetically talking about people going out and trying to create something new.
Yes.
Right? Like
Yeah.
that's not what I do at all today. Do you know what I mean? Like it's not what I do at all.
Right,
Now,
let's
don't get
talk
me wrong,
about that
I
as
try
well.
and take a
I love that
unique,
subject.
you know, like I try and take a unique angle on things and I take my own approach, and I think that a lot of my personal brand is as unique as possible.
Yeah.
Right? Like who James Camp is, like that's something that is defensible and has a moat, and like we can talk about the exact same things, and coming from you versus coming from me, people might be more interested in one or the other. But in general, when we talk about business models, I've sort of, I won't say given up, but like I've stopped the like, how do I build the next Facebook? How do I build the next Amazon? How do I build this thing that no one has done before?
Yeah.
Because I enjoy winning, you know, and I can tell you that I've had a couple wins and I've made some money, and that like the money part, don't get me wrong, I'm sure if I made $1 billion, I would be ecstatic.
Yeah.
But in general, like you become very numb
Yes.
to making $100K in a day. Not that that's something I do all the time, but I've made $100,000 in a day, and when that happens, you become like I felt richer the first time I made $20,000 in a day.
Yeah.
You know, than the first time we hit $100K in a day, right? Because you just become numb and used to it. So my point is that like I don't go for these ridiculous moonshots that I think have a 1 in 1,000 chance of winning. What I try and do is take like simple business models that I think make sense and look for inefficiencies in them, or ways that I can come at them with my own unique angle. And that's sort of what I've really started to lean into with the website flipping stuff, which is, you know, in general, it's interesting. My shtick, my personal brand that everyone sort of knows me for is about website flipping.
Yes, yeah.
And ironically, I kind of fell into that. And what I mean by that is I had bought and built and sold like over time 14 or 15 websites, right? Like enough to really know about like how to sell websites, right? How to improve them and make this happen. But I was not thinking of myself as like a website flipping guy. But I had sold a company that included a portfolio of websites in 2020. And that was a really big win we had. And like it was the middle of COVID. I was not doing much post that sale. I was like sort of hanging out in my backyard in Williamsburg, cooking steaks, you know, like trying to figure out what I want to do. And I found Twitter. And I had Twitter for many years before, but I hadn't really touched it, and I hadn't thought of it from like a personal brand standpoint. I just tweeted dumb things.
Now you're kind of a big deal on Twitter. Kind of.
I think what's weird about Twitter is that I have about 50,000 followers on Twitter. I'm pretty confident that like 50,000 followers on Twitter is like me having 250,000 on Instagram, right? I'm very confident like that there's just a lot more value in the Twitter followers, and more importantly, the relationships. Like it's just crazy. I told you I had a big founder of a big unicorn offered me $2 million on Twitter the other day, right? Yesterday.
And he only knows you through Twitter.
Only knows me through Twitter. He started following me 2 days ago,
exactly.
right? You know, like just the day before. Now, granted, who knows whether that will come to fruition, but I'm just saying that sort of level of networking doesn't happen through other social channels I recognize, right? You know, so I got bigger on Twitter because I started doing threads. I had a good friend who was like, man, you're always talking about these websites that you have bought or sold, or like you flip them. Like, why don't you just tweet about it? So I put together a thread, and I think the first time I did a thread, I think I had 900 followers initially, and I got like 1,300 more in 24 hours, and I was like, whoa, this is so crazy, you know, like, and then so I you know, Gary V style, you know, just gave, right? There was no goal. I had just made more money than I ever made in my entire life, right? Like I had nothing to gain from this. I hadn't thought about how to sell an info product or monetize personal brand, and I don't know, maybe at that point I had 2,000 followers when I was done, so like, there was nothing really magical there yet, so I just like kept just giving because I was getting the dopamine hit.
Yes.
That was like likes and comments, and I actually think that we're very lucky, our generation and the younger generation, to like that you can find business models in which you can get such quick dopamine hits.
Mm-hmm.
Because I know plenty of people that would never stick with, like plenty of influencers, for example, that would never stick with traditional business models that had no wins for them ever. But like they're happy to keep posting on Instagram 15 times a day because they get that quick dopamine hit again and again and again. And that sort of allows them to build like a big business. So I sort of became the website flipping guy because everything I was doing and talking about, that's what really resonated with people.
And would you say that's quite unique? Yeah, not unique necessarily, but I don't actually know about anyone else who would be talking about that on Twitter. Obviously, I mean, maybe it's your space.
So there's like one or two other people. This is not me being cocky. I will never say I'm the best at it or anything like that. I'm sure they're better people than me. I'm a jack of all trades, master of none kind of guy, right? Like I'm a generalist, right? There are much better SEOs. There are much better PPC guys. There are much better content writers. All the above. But I definitely am the biggest. Like if you're looking for website flipping as a niche, buying and selling websites, like I would say that I'm for sure top 3 largest accounts, and maybe the largest one there is. I mean, I don't want to say I am if I'm not, but anyway, it doesn't matter. It's what's interesting is that it's a really, when I talk about buying websites, people are always like, what? You can buy a website? Or like, because it's so regular to me. The first website I sold was like 15 years ago, and like. And so the idea that people are like, what? You can buy a website for 20 grand, for 10 grand, you know what I mean? Like that makes money. Yeah. That's so crazy. And to me, what is just like normal has been part of my life since I was a teenager. I'm always blown away that people don't recognize that there's an opportunity to do so here. And so because I failed, this goes into my thesis, because I failed so many businesses and only, we'll say 3 of them were a win, but really 2 of them one of them was an 8-figure exit, and then I had one 5-figure exit, sub 100K. I had one that was just sub $1 million very recently, and then one 8-figure one in 2020. And like candidly, the 8-figure one, like I was the smallest co-founder, and we raised rounds of equity, we raised rounds of debt. So whenever people hear that we sold this business for like $31 million, they're like, everyone thinks James has $31 million. I don't have $31 million. It's like, so.
James just admitted on camera, everyone.
I do not have $31 million. I am nowhere near that, And that's just the truth, right? And I think that people become disillusioned by these massive VC things. Anyway, so because I failed so much, I've realized most businesses and most websites and plans fail going like 0 to 1, right? They going from like ideation to traction.
Yes.
And so like the buying of websites and flipping websites is really just about skipping the 0 to 1, right? And so when I go back to this idea of like forgetting the vacuum, forgetting that in the vacuum, yes, the most alpha, the most gain you can get is building from 0 to 1 because you own everything and you get to control it fully. And you don't have to put up any money very often, right? If you're building from scratch, right? But if you buy a website that's making $100 a month, let's just use it as a small example. It's probably like a $4,000 website. Okay, well, for $4,000, I can promise you that starting up your business from 0, you're going to spend $4,000 and a lot of time trying to get that blog or that niche website up to $100 a month.
And it might never get there.
Forget that vacuum and it might never get there. But even if I guaranteed you it would, and I told you it was going to take 18 months, I bet you 99% of people would give up before the 18 months, even if they were guaranteed that it would work. So my whole thesis is like, how do we skip 0 to 1, right? Because if you can take that $4,000 and you can buy a website that's already cash flowing $100 in a niche that you enjoy, that you love, that you're interested in, right? Like, well, now you're already there. Now tomorrow you're going to make money. You get the dopamine hit that you need tomorrow, the moment you buy that website. And so I think you just are much more likely to continue pushing the ball forward if you do that. And so it's really just about like, how do we make sure that people win? How do I make sure that I'm winning? You know what I mean? Like, and it's to buy things that are already winning. You know what I mean? And find inefficiencies in them and make them better. But it's really just a hack for my brain. And then to sum it up, and I'll shut up in a second, but I talk about flipping a lot. More is like I've consulted a lot of people on buying websites and stuff like that. And the flip, what I find very often is a flip is more of like marketing. It's more of a way for me to bring you into this concept when really a lot of people want to buy and build and hold portfolios of cash flow positive websites. Yeah. And so what's interesting about the flip is that just the same tenet of any value-added PE firm or repositioning of a house, for a real estate investor, is that like, if I can, let's say websites sell for, just to make the math easy, 40 times monthly net revenue. If I can increase a website's revenue by $1, then I actually just increase the EV, the enterprise value of said website by $40.
Yeah.
Right? And I can capture that upon the sale of it.
Yeah.
Right? So like it becomes super interesting to people. And this is not, I'm no rocket scientist here. I'm a very normal, like perfectly smart, fine dude who like just tries hard. The reality is that concept of like capturing revenue multiples in the sale through equity of a business is not something that most people know about already. Mm-hmm. So when that clicks for them, they're like, whoa, whoa, whoa. So if I buy a website that's making $150 a month and I increase it to $200 a month, which by the way is totally reasonable, that seems reasonable, right? Okay, great. Well, you just, in that one change, just increase the website's value by $2,000 if we're looking at a 40x multiple on the revenue, right? So then you think about flipping it, and that's why people love the website flipping idea, because in general, you can capture a massive multiple on the money you put in very quickly. But I find that the people that often do best with this kind of stuff are people that want to hold a portfolio of them.
Yeah, I was actually wondering about that.
Because it's good cash flow.
Yeah. I was actually wondering about that. And then you can still sell whenever you want, right? But at the end of the day, cash flow.
Absolutely. And it's semi-passive. I don't believe in passive income. You want passive income, go fucking buy AT&T stock. They give you a 4% dividend yield for 30 years straight. That's a great opportunity. Or invest in the S&P 500. You'll get like a 0.72% dividend yield. That's fully passive, and that's great. I think people think often, because I talk about website flipping so much and investing in websites, that like I'm like anti-real estate or anti-equities markets or anti-fixed income market. Like, not at all. I just think it's a very overlooked opportunity, and I think that it's it's just a ton of opportunity in the space.
I agree. Very very few people talk about it or think about it even. So if we look at the process, right? So essentially, in 3 simple steps, you buy a website, you optimize it, and then you sell it if you want to flip it, right?
Yep. Sure.
Let's talk a little bit about each one of those steps. So first, buying, right? That might be the scariest step for many other people. It's like, well, how do I know what to buy? How do I know if I can optimize it? How do I make sure I'm not going to get scammed? Like, where do you even find the websites? How do you do it?
Totally. So the buying it's arguably the most important part of this. I mean, actually, unequivocally the most important part of this. Because as long as you buy a good website, forget improving it. I mean, great. If we're talking about a 40x monthly SDE, sales discretionary earnings, or net income, we're literally talking about an asset that brings you, or at a 48x. Let's say that make a website, an asset that brings you 25% cash on cash return unlevered, like zero debt, zero leverage, right? And at a 36x, actually, to 3 year, you're getting 33% every year on your money. So forget even buying and improving and flipping and how astronomical the returns can be there. Like, as long as you buy a decent site and you have some idea of what you're doing, you're going to beat every dividend on any stock in the history of all time, right? Because these are micro businesses, right? This is basically private equity. This is micro private equity. And that's why the returns are like that. Also, slightly higher risk. You want to be super safe, go invest in the S&P 500, right? So in terms of how you buy them, there's like, people are surprised, but there's a bunch of brokers and marketplaces that exist. Flippa, FE International, Empire Flippers, Motion Invest. I mean, I'm Micro Acquire. There's just so many. There's Facebook groups. There's Quiet Light. There's other brokerages. There's email. There's also like, I wouldn't say underground, but we have these like little communities of people. You know, it's like people know I buy and sell sites. They know that I'm not a broker, but I've brokered the sale of websites before. So sometimes someone's trying to sell me a website or a business, and it's not for me. So I'll pass it on to somebody, right? So it's just like a little, and this is probably true about real estate as well, right? Like, you want to go buy real estate, you can go to a broker, but like if you're in the commercial real estate game, you know, you're probably getting phone calls from people before they're on the market, right? Like, if, you know, so the real trick here is like,
the best way, or is it just the easiest way? Because one thing I'm thinking about is, if you have a marketplace, then, you know, you got competition, people try to get the best price. Would you ever just, I don't know, find a good website and, you know, reach out to the owner and say, hey, do you want to sell?
So I have bought websites off market and sold websites off market before, but I would tell you that like that's something that I feel very comfortable with, but I would never, like, if someone's like interested in this, I would never suggest that to them, right? Because I just know, forget even like understanding how to like due diligence things correctly. Like, I could just gut check things pretty quickly, right? Like, I've been doing this long enough that I could look at almost any website or listing and like within 2 minutes tell you whether it was worth spending the 2.5 hours looking into it. You know what I mean? Whereas for somebody else, like, and again, it's so risky, right? Like, if you buy a good site, it's not incredibly risky. The risk is buying a bad website.
Yeah, exactly.
Right? And so I comp it out to real estate all the time, where it's like you buy a good house in the right neighborhood, maybe the rent goes down, maybe something breaks, right? But like you own the house, right? So I want people to buy good websites. What I sort of preach for people when I show them how to do this or I talk about it is like, we want to buy good properties in good neighborhoods that need like paint and maybe some new appliances.
Yeah.
I don't want you to buy the tear down property that you gotta redo. When I sold my company DMO in 2020, I had some money and I was like, I'm gonna become a real estate investor. So I bought a house. Bought a house in West Philly and I lived in New York City. Wired off a bunch of money for a house I hadn't seen. I was gonna start building a portfolio of BRRRR properties. So BRRRR being is like buy, rehab, renovate, rent, repeat, right? And so that's a great way to make money. So I was convinced I could do this. And I bought a house that I had to like tear down all the walls. I added a floor, added a deck off the back, redid everything. I had budgeted 55 grand. I ended up spending 125 grand on the renovations. And I really, at the end of 9 months and risking about $250,000 of my own money and taking on a loan at 11.99%, that if I had not finished off correctly, they were going to take the whole house, right? Was a real lesson and a good comp for the website stuff, which is like, unless you really know what you're doing, don't go buy the teardown. Don't go buy the thing that needs a ton of work, right? Go buy the house, go buy the website that needs some new paint on the walls, and you can raise the rent by 10%, right? Because, if I can show you how to buy a website that makes you 25% cash on cash return, and you can, and you can raise the rent on the website, i.e. the money that the website's bringing in by, 20%, right? The idea is like to find 5 or 6 small changes that are each like 3 or 4% changes in revenue that might have been overlooked or might not have been worth the time to the last owner, and to implement those and change it. And that's how you mitigate risk, and that's how you get bigger returns. But it's all about like just really the things are, do you understand how to look at Google Analytics, right? Can you verify that traffic is real, and can you verify that revenue is real? And then can you use a tool to make sure that it's not like a bunch of spam backlinks, like you use a tool like Ahrefs or SEMrush, right? And once you have a decent understanding of that stuff, like, I can't promise you that the business, you're buying a business, I can't promise you that the business you buy is just going to grow and make more and more money, but I can promise you it's not just going to go to zero the next day, right? And that's, I think, where most people lose out, is they buy a website that, from my perspective, is too good to be true. They're like, oh my God, it's only for sale for 2 times the yearly revenue. Well, I can tell you this market is healthy enough that there are enough buyers that that's not possible, unless you found some off-market deal from someone that doesn't know what's happening. But in general, like if it's on a brokerage or a marketplace like Flippa, and it's for sale for, it makes $800 a month, it's for sale for $8,000. Like, no, there's a problem with that, right? Like there's a reason.
3 to 4 times revenue is generally a good number. Yeah.
I found a good tweet. I found a post of mine from a forum that I was a moderator on like 15 years ago. And I had it's like a big internet marketing forum. But I found the first post I did about selling a website. And I think it was like 2010 or 2008 or something. And I said, hey guys, I just sold a website making $500 a month for $5,000. All you need to do is get to $500 a month, and you can get 10 times the monthly revenue for it. That's how new this was. That people were like, that was like mind-boggling. And so what I've seen is that valuations and multiples are getting higher and higher. And when I first started talking about this on Twitter a lot in my newsletter, really it was more 30 times monthly net to 36, right? And now what we're seeing is more in the 40 range. I've seen people pay 60 times monthly. I've seen people pay 4, 5, 6 years up front, which is fine because they recognize that there's immediate changes they can make that are going to make double the money. So why does it matter? But yeah, I would say that 3 to 4 years is probably a pretty good range for what you should expect to be paying for like a niche affiliate site, i.e. a blog, right? Like just a review website, like, or something like that. So 3 to 4 years is pretty.
Is that mostly the kind of websites that you buy? So it's either some niche content blogs, content websites, reviews?
Totally. So not me so much, yes. I mean, I've done a bunch of those. I'm now trying to think a little bit bigger. Like in 2021, we acquired like a DTC, like consumer packaged goods brand that we sold to a private equity firm at the end of last year. We started the sale and we just closed the sale of it in February 2022. And that business did about $3 million top line in 12 months. And that was more like a direct to consumer.
That's a little bit more than just a website.
So yes, so the problem with me, I'm very careful with, again, to go back to like making sure people win. I don't want to disillusion people by them thinking that buying a DTC brand is an easy thing to do. There's a lot more upside, I think, in CPG, like in physical goods, because just COGS come down with scale, right? So the more widgets I buy, if I'm buying widgets and selling them, the more I buy at wholesale, the more my costs come down and I get more margin on the sale. And you can do like retention of customers and upsell them and cross them and all this stuff. But like it just, there's so many more moving parts. Like if you bought a DTC brand, Shopify store for those that are, that aren't unaware, right? You got to run paid traffic, organic traffic, email flows, customer service. You got to do sourcing, inventory management, right? Like conversion rate optimization, everything. And I can tell you that for $1,000 a month in profit, you're basically working a full-time job at that level, right? With a brand like that. Now, do I think that those have the ability to scale to 100 million? For sure. Right? But the niche content sites at $1,000 a month in profits, you're really maybe putting up a couple articles, maybe building some backlinks, but it's just so much more manageable for the average Joe. And so that's really what I preach about to people mostly, because I just don't want people to lose their money. No, I just don't want people to lose.
For sure. Is it, so we're going to talk about optimization in a second, but now you were talking about the D2C brand. Did you optimize that in a very similar way as you would the, regular small content website?
Totally different way.
Totally different way. Okay, yeah, that's what I was wondering.
Totally different. So like a normal website, like a content site, I'd be looking at like, let's say it had Amazon Associates, it's an Amazon affiliate program, right? Like it's reviewing stuff. We would be looking to like add product comparison tables. Like I want to make sure all the hundreds of different backlinks aren't going to sold out products and are optimized correctly. I'm worried about, the goal is to get people to click on a link that I don't retain that customer. They're gone forever. I'm a bridge for a customer to find a product, right? Then on information pages, I might be using display advertisements, right? To make money from people like using like AdSense or Mediavine or Ezoic or AdThrive, right? So on product pages, I'm trying to get an affiliate commission from the sale of product. On information pages, I'm trying to get them to click a random ad, right? With e-commerce,
so that's on
DTC, for example. No, I'd say with the e-commerce stuff, like we're talking about funnels. Like we are trying to convert people at multiple points. Like I'm trying to create awareness for them at one point. Then we have top of funnel, middle of funnel, bottom of funnel, customer retention. How do I re-engage them once they've already purchased? I'm bringing them back. I own that data now once you purchase from me. Versus these niche affiliate sites, like you are literally a bridge. Now, there's less money for you in the long run because you are the bridge. You are the place where the advertisers are buying ads, and the advertiser is making money by paying you for those ads. So someone's making more money off that click than you are, right? When someone clicks an ad on your website. But the amount of inputs that are there are astronomically lower for you to manage. And then the other thing about the e-commerce stuff is that I don't think people recognize, like, if you're going paid, like I hope you have tens of thousands of dollars to learn to lose on paid traffic, trying to figure out how to acquire customers, right? Because that's just a very likely scenario. And then sometimes you're what we call not even self-liquidating on the front end, i.e. you're losing money. All these venture-backed companies are losing money acquiring customers, right? Oh, and by the way, now you're competing with a bunch of people that are losing money acquiring customers, right? So you're not venture-backed. You want to go start a DTC brand, an e-commerce brand, and you're bidding on the same keywords or the same eyeballs as someone who just raised $80 million. And by the way, when they raised the $80 million, no one asked them to be profitable. No one asked them to be profitable. Somebody said, if you spend this $80 million on growth unprofitably, we'll get you another 100 million.
That's
right?
literally what happens.
That's literally what happens. And so it's not a fun race to be in if you don't know what you're doing, right? So it just becomes really, really, really tough. So I really push people away from e-commerce unless they're like have a unique product that they want to build or they sell, or they have experience as a media buyer or experience as an email marketer. But if you're like new to all this, it's so much easier to like do like a sort of niche affiliate site, like content blog. Like that's just so much more likely for you to not lose everything.
And so there mostly the optimization that you talked about before was on the revenue side, right? How do you start generating more revenue with, I guess, the equivalent amount of traffic, but you can still optimize the traffic as well, right? Even if you don't go into paid.
Totally. Yeah. So with like a niche blog, like a content site, you're really that's a great point. No one's really asked me that, but yeah, the main goal here is optimizing revenue, right? You might be switching an ad network, you might be making it more the UI, more likely to get somebody to click an ad, and then in the long run, the only ways to increase revenue are by optimizing for the revenue, or getting paid more for the amount of people that come to your page, or increasing the amount of people that come to your page. And I can tell you it's about 100 times easier to get paid more for the people coming to your page than it is to increase the people coming to your page. So the first things we look at doing are getting paid more for the amount of people that come to your website. Then we look at like SEO. We look at trying to build retention models if possible. For example, if you had a website about mountain biking, I don't know, just chose something really random, right? And there were certain pages that were reviewing mountain bikes and certain pages that were talking about mountain biking. Like, you could probably build a newsletter on top of that, right? And so let's say you're getting 50,000 visitors a month to that website, and it's making $1,000 a month. Cool. Well, if you can get an email capture, like a pop-up or an exit pop intent, like an exit intent pop or any of these things, to capture an email address for a lead magnet or a newsletter, maybe you get 2% of them a month. Okay, cool. Well, now you got another 1,000 email subscribers every month, and in 12 months you have 12,000 new email subscribers, right? And so those people you can bring back to the website again and again. You can sell them products directly through email, right? So that's a great way to increase traffic. And then we look at like SEO and social organic channels, right? But I can tell you that as a very strong, most websites that are monetized with ads, you just should never even try and send paid traffic to it. You'll lose your money every fucking time. Like it's just so difficult. It's so. And there used to be more of that, basically PPC arbitrage. You're basically paying for a click, hoping that you get more out of that click immediately. But that game has just changed astronomically, partially because you have something like 80 or 90% of every venture dollar in the United States goes to Facebook and Google. Yeah. It's like crazy, right? Yeah. So I just don't even, and again, if the right person came to me and was like, hey, we have this, I want to do this, we could talk about that, right? But like, if you're like, hey, I have a job and I got $20,000 and what can I do to invest and buy an online business? Like I would be like, stay away from e-commerce. Like you're screwed, and don't run paid ads. I would look for things that were like, niche sites and using organic traffic to get their eyeballs.
Okay. And so most of it comes from SEO, is that right? From Google? Or?
Mostly SEO, yeah, mostly Google. I've done a lot through social before, a lot of traffic through social before. Yeah, I mean, we did. I'm really into like Facebook groups and subreddits.
So like actually building a community or posting content
being in the communities. Yeah. So it's like, when we built the largest financial news website in the cannabis space a couple of years back and sold that. And so we were doing like 2 million uniques a year, not massive, but like big for a niche website, right? And at a very high RPM, so like revenue per meal, basically what you get for every 1,000 views. And a lot of that came from like finding communities where people are already talking about financial, like pot stocks, really like marijuana stocks. Yeah. And so you'd find these Facebook groups with 3,000 people in them, 5,000 people in them. And there was like 100 of them, right? So it's like, if you can join these groups, I have a sort of thesis that like every one of your customers is already gathered somewhere online. And you just need to like infiltrate that, for lack of a better term. You just need to become part of that community. And don't spam it. The moment you start spamming your content is the moment they kick you out, they hate you. Yeah. But just like Twitter, like I did yesterday like 2,300 clicks to my website is nanoflips.com. It's literally a landing page for a newsletter. That's all it is. I did 2,300 clicks yesterday to it from Twitter, right? From one tweet on Twitter. Yeah. And so the reason I use that as an example is to say that like, I give a lot of value to Twitter. No one feels like I'm spamming Twitter if I do one thing where I ask you to, where I say, here, you can sign up. So same thing with the Facebook groups or the subreddits or core answers, or, you know what I mean? Like, as long as you're providing a lot of value, it's okay to bring people to your site every now and then. I think the problem that most people run into is when they hear me say Facebook groups, they hear me say social, and their assumption is that like, they're just going to build something that just gets 2,300 clicks. I'm on Twitter 3 hours a day, 365 days a year, and have been for 2 years straight, right? I work literally, people don't even recognize it, 90 hours a month on Twitter. Forget even the business that comes from it. Okay, so I worked 2.5 work weeks for the average Joe on Twitter for 2 years straight. I would hope that I could, if anyone really puts in that effort in a concerted way, I hope they can drive 2,500 clicks to a website. You know what I mean? And the trick is just like, it's about really learning to give enough value and partake in the community and being active and really part of it, as opposed to just like, people will be like, oh, I posted 50 tweets and no one, dude, sometimes I do 120 tweets in a day. You know what I mean? Like, it's just, you get out what you put in, and it really is that hockey stick growth, right? Where in the beginning, you're just like yelling at a silent room, and the same thing with the Facebook groups and SEO. Maybe you're just like sharing content and being a community member, forums, right? And no one cares about what you say, and then eventually you get something that hits, people start really respecting you and come back to you. But yeah, so organic search, like Google, Bing, Yahoo, but mostly Google. And then online communities. God, online communities are so slept on, like Facebook groups, Reddits, forums. Somebody has already gathered everyone. If you're buying a website about mountain biking, to use that example again, I guarantee you, go to Facebook, go to the top and search mountain biking and search groups. I guarantee you there are hundreds of groups of people already gathered who are talking about mountain biking. I guarantee you there are mountain biking forums. I guarantee you there are Reddits about mountain biking. I guarantee you there, you know what I'm saying? So I think people just sleep on that a lot. So yeah.
Did you figure out any hack how to actually find within those communities how to quickly identify the threads, the questions that are relevant for you? Because it's a lot. I mean, you can obviously, if it's something you're interested in, or if you just commit a lot of time to it, you can, search through them every day, or you can have an assistant to search through them. But I always, whenever I've been involved in something that required, looking through those communities, I was like, man, I just wish there was like a tool that would just send me notifications every day when there's a keyword or something.
I mean, you could just hit up Google Trends. I mean, to be very honest with you, Trends will tell you what is trending for keywords, right? Yeah. Like topics that are trending for certain, like Google Trends will just like email you. You can set it to email you whenever you want, right?
Trends, Google notifications, or what it's called. It's mentions.
Let me see.
Trends is the, over time, the volume of
trend. Yeah, and you can have it send you, I haven't done this in so long, man. But anyway, everyone go look at trends.google.com and you'll dig through it and you can find it, right? But you can have them send you like trending topics and articles within a niche, right? I would start by sharing those trending topics and articles. Like if we're talking about mountain biking, and I would, there's also like social listening tools. But you see what I'm saying? Have them send you what's really trending and popular about mountain biking that day. What article, and share that article. You know what I mean? That's not yours, right? Or write about that topic. You know what I mean? Like I'm just gonna pull something out of thin air, but let's talk about F1, right? F1's become really popular in the US recently, right? Because of this Netflix show, right? But so let's say F1, you don't know much about F1 and you find all these groups that are talking about F1 and you're having Google send you Google Alerts, that's what it is. That's why I'm getting confused with trends. Yes. Google Alerts, sorry. You set up a Google Alert for certain niches, right? And so it'll tell you what is popular with that alert. It'll send you an alert for what's popular in that niche. And so maybe articles talking about Lewis Hamilton. Okay, great. I know that Lewis Hamilton is really popular in F1 today. So I know that these Facebook groups is at least going to resonate with them. They're not going to be deeply offended by it, right? Like, like the GP in Bahrain or the GP in wherever, right? Like, my point is I don't know if there's like a singular tool that makes it happen, but obviously over time you start to really understand what's important to people. And I would also niche down in those groups, right? So like, for example, when we were in the cannabis space, talking about marijuana stocks, like marijuana stocks is already niche enough on its own, but we would also like go find groups. There's a company called Canopy. So we'd go find a group of people that were just talking about Canopy, about a singular stock. Everyone in there is interested in talking about that, right? So any news about that stock, whether it traded up or down, or whether it's, bought a company or made higher revenue or lower revenue or beat earnings, like I could talk about any of that in that singular group. People loved it. So it's about really niching down, I think is the key to that.
Got it. Okay. Something totally random, which is going to be too late for everyone who's listening to the podcast, but it might be relevant for you. On the content subject, do you know copy.ai, the website that's just like generating using GPT?
I do know copy.ai. I'm not knocking copy.ai, but you're going to ask me what I think about GPT-3 related content?
No, there's something else that I want to tell about copy.ai. So they just launched a new product today, which generates the whole blog post. So you can, in 3 steps, you generate a whole blog post. First, First step is you type in the title, and then it generates like a rough content breakdown, just like the subtitles in the article, and then you can confirm or change or remove some of them or generate completely new ones. You click next, then it generates like a breakdown for each one of those subtitles. So you get like an outline of the article. Again, you can change, you can optimize as much as you want. You click next again, and it generates the whole article, 1,000, 1,500 words. And it's legit, it's genuinely good. I've tried those kind of tools in the past, like a year ago, and they were really bad. Like the content was like, man, it was not usable. This is legit really good. And I've tried some quite complex articles, quite complex topics, and it wrote good articles. So, and it's completely free, unlimited use for the next 48 hours. So if you need any content,
yeah,
it's a good time.
I'm all for it. I actually know Blake is the CMO of Copy AI. Like I know some of those guys, and then I forget the founder. He's a very nice guy. God, I'm blanking on his name. Anyway, yeah, that's cool that they're starting to do it. What I will tell you is that I've used a lot of GPT-3 driven content generations like that, and all I would suggest to anyone who does that, I think it's a great opportunity for sure. I use a different tool. I'm not going to plug them, but I use a different one for that. Is like still when it's done, to go over it with a human eyeball.
Yeah, 100%.
You know what I mean? Like
absolutely.
Even the best of the best. Because honestly, like Jasper, which is Jarvis, or Copy AI, or all these are like the very new they just came out of OpenAI, right? They use GPT-3, right? So but there's been, we created our own conditional logic sort of content creation in the past before. At scale, go look at like Reuters or Bloomberg or Fox Sports. Like it's all AI content for like financial news breakdowns or sports scores. They use things called Wordsmith, but automated insights, but those are more like $12,000 setup fees, followed by like $6,000 a month. But I'm a huge fan of things that Copy AI and Jasper and stuff like that can do, because it's not about fully removing yourself from that process. It's about removing 90% of the minutia from you.
Yes, exactly.
And then I just, if anyone uses Copy AI, kudos to them, go crush it. But then just go over it with your human eye and edit it. Take the 10 minutes to edit it afterwards. It's going to be that much better.
You certainly want to fact check it, because some things are going to be completely off or just not aligned with your narrative that you're trying to make with the article.
Totally.
But I'm impressed by how good these tools got. And
I'll have to give it another shot, man. I'm on their site now. I haven't tried it in a while. Last time I tried it, they were not doing the blog article stuff.
Yeah, that's completely
new. So
new.
it's probably very early on for them.
That's completely new. So give it a go. And even later, I think that now it's free for 48 hours, and then it's like $50 a month or something, which is like it's nothing in comparison to hiring.
If you're buying a website and you're building it out, you're going to be wanting to put at least an article to a month. I would really be trying to put an article a week up. And so people ask me, how much time does it take? Like you can buy a website making $500 a month right now for $20,000 or something, right? And that'd be great. And people are like, oh, then it gets destroyed. Well, no, just like once a week, take an hour, make an article with Copy AI. You know what I mean? Like clean it up yourself, put it up on there, and then go post it to social and try and get a backlink for it. You know what I mean? Take an hour and a half a week or an hour a week. And so what I tell people with the website stuff is like, at the lowest levels, if you put in, let's say, whatever, 20 grand and you have a website that makes $500 a month, we could grow it. I probably could show you pretty quickly how to, for the right website, make like $700 or $800 a month. But okay, so now I'm telling you have to spend an hour a week on it. Okay, for some of you, that's not the right answer, right? You don't want to do that. But if I tell you that you make $800 a month from an hour of work a week, and you could do that work a week from your couch, you could do it from the beach, you could do it anywhere you want on the planet, at any time you want. 11 p.m., 11 a.m., 7 a.m., 30 minutes now, 30 minutes tomorrow, whatever the fuck it is. Sorry, this is my language. But my point is that like, okay, so now you've got a side hustle that makes you $200 an hour. Okay, $200 an hour at a 40-hour work week, that's, $8,000 a week. Okay, if you make, that's a $400,000 a year salary. Great. If $400,000 a year pro rata as your side hustle is not worth it to you, then don't do it. But I would bet 99% of people, $400K in a side hustle, that like, you know what I'm saying, like that $200 an hour as their side hustle is a great side hustle, right? Like, and also again, one that you can do on your own time. And by the way, that also we can add a zero to that really quickly, right? Like we could go buy a $100,000 website that's making $3,000 a month. And I mean, at scale, you're going to want to spend more time, right? But if $3,000 a month, and you could probably spend, let's say 2 hours a week to keep it going, to maintain it and maybe grow it a tiny bit, right? Now we're at 8 hours a month for $3,000. Okay. You know what I mean? Like now you're making something like $325 an hour. Like, okay, that's $600,000 a year, $700,000 a year per rata salary. Like, my point is, like, it's a great opportunity for most people out there, and they just don't recognize it. But it is not fully passive. It is not. It requires, a little bit of love. You know what I mean? Like, it's possible. It's possible to not touch it and to keep ranking for 2 years straight. It's possible. I wouldn't recommend it, though.
Yeah.
You don't want to get screwed by your competitors. So, yeah, that's what I'll say.
Yeah. Yeah, it's interesting. It's something that's not talked about that much, right? How buying a business or a website, which is a business, is so much safer and so much easier, and it saves you so much stress in comparison to building one from scratch, right? And that goes for businesses in general. And it just, I don't know, nobody talks about it, or very, very few people talk about it.
Well, what I find is that when I talk about it, there's two groups of people. Most people are really interested. And then there's the people like, oh no, well, one Google update and you lose everything. I guess, I've never, unless you were like building totally spammy bad backlinks and using fake content, and I don't mean AI generated, I mean like just copying content, like there are very simple rules you have to follow, right? Like, and even then when there's still, everyone talks about Google updates. What I find so funny about Google updates, let's say you're getting organic traffic from Google. Everyone's like, what happens when Google updates? Okay, Google's update does not always make you worse. It sometimes makes you better, right? Google updating its algorithm is not a function of just punishing people. They are just trying to provide the best content and best search results to people. So like, for every person that goes down in the results, somebody else goes higher up, right? So like, a Google update might actually bring you way more traffic, So my game is not even to play like, how do we beat the Google updates? How do we get the best stuff? It's like, how do we just stay middle of the road safe, put out some pretty good content, build some simple backlinks, and just keep chugging along, like make some changes, grow a couple, 1%, 2% every month or two, nothing insane, and like just keep playing it safe,
there are risks involved in anything you do, right? This is still way safer. I think people really don't understand how difficult that 0 to 1 is. When you build something from nothing, and you're like, there's so many things that can go wrong. You have no idea, literally infinite possible directions that you can take. Many of them are wrong. So final thing. Okay, we talked about, you buy, you optimize, and then you sell, right? Can you talk a little bit about the selling aspect? Like what,
Sure.
I suppose you sell kind of in a similar way as how you buy. But what are some aspects there that...
The only thing I think that people don't recognize is important is like to try and this is going from selling businesses for 8 figures to $1,000, is like you want to sort of find a way to pitch upside for the buyer, right? If you want to get as much money out of it as possible. So if you're selling one of these niche content sites, I might include a list of keywords that you haven't built out content for. Right? Like an idea of things that they might be able to do. You want them to see that there's more potential upside for them. Now, and so with the bigger business stuff, it really more is about finding the right strategic buyer in which like your business is worth more to them than it is to you. And that's what happened with us. With the big business I sold in 2020, was that the people that wanted to buy it, it was just much more valuable to them. But in like the smaller like content sites, it's like just how do you make it, package it correctly, track everything you spend, track everything that, the revenue you have come in. You want everything set up. As soon as you own it, make sure that analytics is set up and you're tracking your revenue, and you just want it to be a clean, easy package. You don't want someone to have to dig through hours and hours of due diligence of trying to prove what you're telling them is right. Make it presentable to them. Make it feel like you are professional and you are real. And then give them a little upside, i.e. what are the keywords you could have gone for, or here's a list of Facebook groups we never started sharing to. But whatever it is, just make them feel like there is, and not fakely, but right, like show them that there is potential upside for them as well. Because one of the biggest things I run into is people saying like, well, why would you sell this? Well, first of all, there's a million reasons anyone would sell any business. That's the dumbest question ever, right? Like, why is Elon Musk selling, shares of Tesla, right? He's got a tax bill to pay, right? Why is he exercising options, right? There's a million reasons. Maybe someone wants to go to school. Maybe someone hates running the website. Maybe one wants to buy a car. I don't know. I can't tell you why somebody wants to sell it. The answer is almost always someone says they don't have enough time to run it. And I can't tell you that's always true. But so I would just make sure that you give somebody a reason to buy it, right? Other than just the cash flow that's coming off it. That they believe they can improve more and make their job easier.
Okay, that's very interesting. Yeah, it's definitely something that you wouldn't think about in the beginning, but it makes so much sense. All right, cool. James, one thing that I wanted to ask about is something that you mentioned a few times, but we actually never really talked about it. Is you had one relatively big exit, right? Not
Sure.
relatively. Let's be honest. It was a huge exit
It was good.
by many measures.
Yeah, yeah. Well, it was tiny in terms of all these VC exits, right? You know what I mean? Like everyone hears about these like billion-dollar things. But
Yeah,
yeah,
well, I
so we
mean,
had we
you
had
know,
one little eight-figure
that's
win. Yeah, we had a good win.
yeah. Can you talk a little bit more about that? Just
Sure.
what was the business? What happened
So
there?
it started off as what was started off as just a financial news website. It was really a
Okay,
blog. I had an old friend who had been a
interesting.
commodities trader, and he traded oil derivatives for a living at a prop firm on like Broad Street, like near Wall Street, New York. And I was coming back from London one time, and he was like, "Hey man, I seen you've been working at McKinsey and Google. Like, you think you know about growing websites?" I was like, "For sure, dude. Let's talk about it." And basically, he's incredibly smart and incredibly charming, and convinced me to just like quit everything I was doing and come and do something in the cannabis industry with him, but without touching the plant. We didn't know
Uh-huh.
what we wanted to do, so
Uh-huh.
we built this very large financial news website that was doing a couple $1 million a year in a good year, first of all, which is really important, right? But the way that we really got it sold is we built these like indices. So an index tracks equities, tracks stocks that you put them all together. And we built these indices that we were trying to license to ETF providers. Um, but it was that all the stuff we'd put together of aggregating data to put into these indexes,
Mhm.
combined with the fact that there was a couple companies that came to the website. It was such a fragmented industry. So companies would come to the website and be like, "Hey, can you recommend someone to do strategy for us, or someone to run ads for us, or someone to blankety blank?" And so we ended up taking on some clients doing digital strategy for them that would end up buying ad placement on the website, they'd pay for sponsored posts, and they'd buy placement on the website, and then we would end up getting them into these more complex strategy campaigns that we would build out for them online. But we had a couple of them that we took equity instead of cash from. And some of the ones that we took equity from became really big businesses. And so we were sort of candidly,
Oh
sort
wow.
of towards the end of our rope in 2020. And we had got rid of our office. My partner had moved to New Jersey. I was living in Brooklyn. Had gotten rid of almost all the employees, and we just were sort of over it. And we had built up we had a website that was doing a couple $1 million a year, and a bunch of equity in these companies that had become, some of them not much, but one of them like over $1 billion. And anyway, so we ended up having these big blocks. We had a holdings company that had a portfolio of websites, financial news websites, other cannabis focused websites that were making money and stuff, and then pieces of equity in other companies. And so our plan was just to
Uh-huh.
liquidate everything. We were both over it. We were done
Uh-huh.
with it. We're like, let's get out of here. I'm done with this. It's been four and a
That
half
was
years.
like 4 years into the business.
Yeah, yeah. It was like 4 years
Yeah.
into it.
Okay.
Probably, yeah, it was probably just after 4 years into it, just over 4 years. And so we started calling people to talk about liquidating all the assets of the business, right? We were going to just sell everything off and then pay back the investors and pay ourselves out. And one of the people we called happened to be a major shareholder of one of the businesses that we owned a good chunk of. And he was like, wait a second, how about we figure out something else out here? And so he and a group of people came together and bought out the entire, basically we structured a really weird, convoluted deal where we got X amount of cash up front and X amount of, we did a share swaps, X amount of equity in another business that they had up front. And then instead of, we had a clawback provision on some equity, the company ended up going public. So anyway, the clawback instead of an earnout being like you earn more of it as, or vesting equity earns over time. The
Mm-hmm.
clawback was we got everything up front, but they had, if we didn't hit certain KPIs in 12 months, they could claw back
Mm-hmm.
what they gave us,
Mm-hmm.
right? And we structured it that way for a bunch of different reasons, but most importantly because in the U.S., when you're selling public securities, you have what's called a seasoning restriction from the SEC, where they tell you you have to have owned that stock for a certain amount of time if you were given it in a share swap for a business, right? Before you're allowed to sell it. And so if we'd had it be 50% up front and 50% after 12 months, the ones that we were given after 12 months would have had to wait another 12 months before they were allowed to be sold. Whereas opposed to getting it all up front meant that the entire clock was 12 months and that at the end they could take half back, right? So it was really just a protection for us. Very luckily, our shareholders were an investment bank and a securities attorney, like a law firm that did securities laws and an investment bank. So as much as I like to pretend that I constructed this super clever transaction, my partner did a lot of it. I had a little bit to do with it, but then having like a team of investment bankers and a team of securities attorneys
helped, yeah.
made it pretty helpful. But to be very, very honest with you, Matisse, what's funny is that like I could never rebuild that business. I could never ever rebuild that business. It was like
it sounds the most random thing.
It is the most random thing on the planet, right? And so I was like, not smash and grab, but like I gotta win, and it was a big win, and it was not at all how I planned it to win, and it was, and so it's so funny because whenever I tell that story, it's like the least replicatable story on the face of this planet, and sometimes life just comes together in ways that you could never envision, never plan. That is not. We wanted to buy a broker dealer, which is really an investment bank, and we wanted to sort of like sell to an investment bank and be the financial news arm for like a Cowen or Goldman Sachs or something. I mean, we just had these crazy plans that just never came to fruition, but like we somehow made something else work really beautifully. And what an obscene nightmare that was, but but it ended up being worth it. In the long run.
Clearly,
yeah.
Yes. Nice. Okay, amazing. I'm glad we covered that because, I think we mentioned it. You mentioned it a few times throughout the conversation.
It's such a weird story.
I was curious about the story, and I'm sure that others would be asking me as well about like, well, what was that big win? What was that all about?
Sure. Yeah. So I mean, to be really honest with you, the real lesson I took away from that was two things. A, finding strategic buyers is really important, right? We found someone that thought that we were more valuable inside of them than us just like liquidating assets. And the other side of it was like understanding that back end can be complex. And so to bring this back to the really tiny thing we were talking about with ads on niche affiliate sites is you don't have any back end. You don't own that customer, right? You just are a bridge between a searcher and an advertiser. And we realized that with this website and this fragmented industry is that people were coming to us asking us, to make an extreme example with the mountain biking thing again, like if you were doing 200,000 people a month coming to your website to read reviews on mountain bike parts, you could probably buy a small mountain bike retailer and just sell the parts to them yourself and make a lot more money than you would by actually, you know what I'm saying? So like, it's really just about understanding that there's a lot of value to be captured along the value chain. We just recognize that like, cool, people are coming to us to do sponsored articles and buy banner placements. Okay, I know what they want. They want to figure out how to do this at scale, right? Yeah. And I can't provide them enough ad inventory for what they want. But you know what? I can help them do that, right? This is what I've done for a living for a long time. I know to do that. So like, oh, welcome. I'll sell you my ad inventory. Excellent. Why don't you pay me? I'll also go find you the other places you can buy ad inventory, do the placement for you, put that funnel together, collect emails, do all that. So it was just a real lesson to understand that like there's almost always more juice to squeeze out of a customer or a visitor. The question is you have to figure out whether the juice is worth the squeeze, right? And sometimes it's not. It was for us, clearly.
That's true. And the thing is that you don't know that when you're just looking at the business or an idea from the outside, It's like only when you actually start working on it and then you start seeing, oh, maybe we could do this, or oh, actually our customers or our visitors also have this problem. And you get to know the industry, you get to know the customers, and if you're curious and if you see opportunities, there's so many things often that you can add on top of maybe just the website, right? That you have just 100% in the beginning, right?
100%, man.
Yeah.
Yeah. It just takes a little bit extra work, but yeah.
Yeah, I guess that's life, right?
That's life. Yeah. That's the tagline of life. Just takes a little extra work, for sure.
James, what's next for you? What are you up to now? Just like buying bigger sites, or what are you looking?
So funny you asked that. I've been having this existential crisis about what's next for me. So, I mean...
You have.
Yeah, no, I mean, so don't get me wrong. I bought a website recently. There's another website I'm looking at buying. These are more for, like, proof of concept to, like, just to show people. Like, I have this personal brand has become a thing for me, and I sort of feel, like, fake if I don't actually do what I'm talking about. So I'll keep buying and improving and selling, like, 1 or 2 websites a year probably, well as long as I'm preaching about it, just because I think it's important to, like, actually practice what you preach. Otherwise, I would just feel like a fraud. So I've now do some like coaching and in that space, and which is not like the most fulfilling thing for me, but I've got, Nano Flips is my newsletter, and we just, normally do a free newsletter and do a couple cohorts a year where we teach people how to buy and improve and flip websites. And then the thing that I think I'm really sinking my teeth into is I have a podcast with two of my best friends called Builders Build. And they are, one of them was a co-founder and the other one was brought on later on, but they're both very high up at a public company in the cannabis space. And we have a podcast where we're all just builders. We just love building stuff. And we're looking at sort of where can we take this past a podcast? And I think that what we're looking at doing is maybe a digital conference business, or start hosting these digital conferences. In a post-COVID world, I think there's a lot of opportunity for these online conferences. But at its core, the podcast will be there, which is Builders Build. And I don't know, I hope that becomes a thing that I can sink my teeth into at scale. Because flipping small niche sites is fun. There's good extra money in it. But again, you sort of reach a level where it's like, maybe I need to go buy a $10 million website, right? What I'll leave it on that is that people think that I just talk about $5,000, $500 websites to make it palatable for the average Joe. But you ever heard of NerdWallet? Or Red Ventures owns the Points Guy, BuzzFeed just went to a SPAC. You can go buy 100. A friend of mine, Dave Nemitz, was a founder of Bleacher Report, which he sold for $200 million. You want to. Content websites can be big. You know what I mean? There's a lot of opportunity. Yeah. You can go buy a $50 million website and improve it and flip it. Yeah, 100%. So I'll keep doing the small ones to show people what can be done. I can keep talking about it, but I'm looking for my next big thing to sink my teeth into. I'm hoping that it's Builders Build, the podcast and conferences we want to run and sort of teach people how to just build businesses.
Nice. Really cool. Yeah, I mean, it's kind of... I have this podcast now. It actually started in the same way. I was recording it with one of my best friends, and it was just a fun thing to do. We said, well, we talk about business and about ideas all the time anyway, so we might as well just record it, and maybe some people are going to be interested to listen to that. And it was actually, we started in Slovenian, which is where I'm originally from, and it was really successful. It was a top 3 business podcast for the whole of last year in Slovenia. And I was like, well, okay, so clearly people enjoy listening to this, so that's cool. So maybe I have something interesting to say. Well, then I started doing it in English because I guess it's more interesting for me. Living in London, it's not so relevant for me to do stuff in Slovenia. But it's just fun, right? I think I love doing it. You have interesting conversations. You get all sorts of interesting opportunities through it. You just share what you've learned. And I'll see what comes out of it. I think for now it's fun, and I'm also the podcast is also kind of I'm doing soul searching with the podcast. Well, I'll see where it ends up now when I transition from that, two friends talking about business, to now more of an interview and just searching for what's going to feel right, what's going to be the right thing to do with it, and potentially also combining with something else. I mean, I think that's bigger. The magic of. I mean, to be honest with you, man, I've had, when I talk about my Twitter, and we talk about, it probably did. I can attribute probably in the past 12 months, GMV, let's say gross merchandise value, or just gross value from Twitter. If we include selling a business, if we include revenue, $5 or $6 million. You know what I mean? In the past 12 to 18 months, right? And so that came though from me not going out there and trying to make $5 or $6 million off Twitter. If I had tried to do that, I would have totally failed, right? So it just was being exploratory and fun and enjoying it and finding a niche that hit, and then finding someone who wanted to sell their business to me that was a big enough business that then we bought and then we sold, and then, you know what I mean, and partnerships and stuff. And so I think you're on the right track with the way you're looking at the podcast and the way we're looking at our podcast, which is let's just have fun. One thing that's nice for us is they're two of my best friends who both run a business that does $150, $200 million a year, and they've got wives and children, right? So it's just our way, we get to connect and chat every week, you know what I mean, for a couple hours. It's a way that would almost be impossible otherwise, right? Because their lives are just so chaotic. So, yeah, man. Yeah. Kudos, and I hope you enjoy your soul searching. I'll enjoy mine. We'll find out where to come from it. We'll see. We'll catch up where it goes. We'll see where it goes.
Exactly.
Awesome. All right, James. Thank you so much. I think it was an awesome conversation. I also really enjoyed getting to know you a little bit more.
Cheers, man.
And I'm sure people are gonna love this episode. I think it was great.
Awesome. Thank you for having me, dude. I really appreciate it. I clearly am down to just chat about anything. So I'm happy to rant about website flipping whenever anyone wants to listen to it.
Nice. Awesome. Awesome. Well, we're going to link also to your Twitter and to all your other accounts. So if anyone wants to see your content or reach out, they'll be able to do that. Check out your newsletter and all the other cool things that you do, the podcast.
Awesome. Thanks so much, man.
All right. Thanks.